Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, February 7th, 2024. I am Frank Ochoa, aka PivotBoss. Happy hump day, everyone. Here's a look at the daily time frame of the ES right now. Double inside day for the ES in the previous session. Double inside day occurs when you have an inside day, and the previous inside day is also inside. So you have two engulfing or days here back to back. This one engulfs this one engulfs that one, and you have tremendous compression at these highs. And what tends to happen here is you tend to see expansion out of this range at some point, or at least increased volatility that can tend to happen over the next several days. For example, not quite an inside day here, but you have a very narrow 3-day range. This day breaks out, this day big down, this day big up, and these 3 days much bigger volatility than the prior 3 days here. We could see that type of pattern here to finish out the week, where we have increased volatility following such narrow compression over the last 3 days. Now we do have 5,000 just above, so this market's still reaching for 5,000. Got very close on Friday here, and if we do reach 5,000, it is the next market structure edge up from the 4,600 level. These are 400-point distributions with a 200-point midline, and if we do make it through 5,000, there could be an opportunity here where there may be some sort of near-term rejection, a near-term rejection that brings us back toward 48, maybe even back toward 46, and then back up the way we go. The next major market structure level up will be 5,400 down the road. So right here, going to watch this level very closely. Again, if there is some sort of failure to really get going out of the 2-day range or 3-day range, a rejection could bring us back within the range for an outside day down as this market continues to test the 5,000 level. So again, keeping an eye on 5,000 here. Do we get a smooth breakout from this level here today? We did have quite a bit of bullish reaction here in the 6 o'clock hour Central Time and holding at the highs at the moment. Again, 5,000 is going to be very, very important here up ahead to see how the market responds. Any failure, again, and you could be rotating at least back down within this developing D-shaped profile, which could bring you back toward 48.50. Even if a move like that happens, bulls still very much in command of this overall trend until proven otherwise. We take a look here at the NQ. Right here, you'll notice very similar bullish reaction here to begin the day here with a little bit of strength. Still a very narrow 3-day range. You can come down here and quantify this with the PivotBoss Advanced ADR indicator, and you'll see how compressed the current 3-day range is. We've had some compression like this before, and again, when you get compressed on a 3-day basis, you tend to see increased volatility in the 3 sessions that follow. Sometimes you go 4-day narrow range, 5-day, 6-day, as this thing continues to build out. And this one, again, very bullish overall trend, continuing to honor the LVN here, holding at these highs. Do we get an upside break through 17.8 for the first time here? Very similar to that 5,000 level in the ES. If we do get a push through the upside, can it expand the range to the upside, or do we begin to fall back down this D-shaped profile here? Again, even if we were to fall back into the D-shaped profile, bulls looking to keep things bid until proven otherwise. And as we mentioned before, a failure here would open up a return back towards 16.3 down below. So right now, bulls still in control of the overall trend. This market continues to hold above a rising 8-period average. Still inside the narrow range here, though. And so again, not yet seeing any type of major expansion. Do we stay in the range? Keep an eye on 17.8 today. If we come into this zone, any failure could bring us back into the range below until proven otherwise. Taking a look here at crude oil. This one's up about 0.8% at the moment, 99 cents of range. And again, a little bit of a bounce off of the previous year's close. A decent reversal here, not the strongest rejection. This was a much stronger rejection. This was a much stronger rejection. This was a stronger rejection. This was a pretty weak bounce. But nonetheless, it is a bounce back up. We're now testing the previous month's midpoint from below after having taken it offer to begin the month. And that's kind of the battle line right now. If it can't get through that level, we may be looking at another round of weakness up ahead. This 74 level is also a big level here as well, kind of the midline of the larger key range. This is kind of where the mud is for this chart. This is where things get sticky here, and really the edges have provided the most opportunity when price gets away from the edges. So we're kind of in the middle of the mess right now for crude oil. It's trying to push higher here, but if it cannot find acceptance through 74s, we may be looking at a push back down. Maybe a retest of this low could be ahead. Looking at gold futures, marginally lower at the moment, trading 250 right now. This one's also kind of in the mud as well, kind of stuck here in the center of this range. We've talked about how messy it's gotten in here, and again, you got to avoid the chop in the middle of the range. We haven't really been able to get through the 2080 level. We haven't been able to really fall through the 2000 level. So there's an 80 point range here off the 2000 level, with 2040 being the midline. We've spent some time in the lower half. We've spent some time in the upper half, but we haven't been able to get out of the range. The failure at 2040, and we go down to 2000 and stay in here. If it bounces off 240, we may go test 2080 again. But really, these extremes have been locked in for so long that this market is just kind of trading in the middle of the range, awaiting something. At some point, we'll get the next big move. It could be very active, but as I've mentioned before, this market has a tendency to go compressed and go sideways for a while. This was one of those times here where it just kind of went nowhere for a while around a flat VWAP, and then major expansion to the downside, major reversal back up, and then a follow through to the upside. So we have a similar compression that's happening here, and soon we could see quite a bit of expansion out of this range, perhaps a reversal back up, however that plays out. But until then, there could be a lot more chop in the center, so avoid the chop for now. Taking a look lastly here at the YM. The YM remains quite bullish. This thing continues to trend up overall, but is stuck within a 5, 6, 7 day range. 1, 2, 3, 4, 5, 6, 7 days here in this range. You can call it 8. That's quite a compression here with an upward bias. So if we quantify it here, it's a wide compression, wide-ranging compression. So quite a bit different. So if you have this 7 day range here, it's wide compared to, say, this little 5 day range, much more compressed. So it's not really reflecting in terms of the averages, but in terms of a bulk number here, this is still quite narrow, still upward bias, still has the potential to bust through 38.8 and continue this thing toward, say, 40,000 up above. We are getting, at the moment, a developing trend confirmed buy signal. These blue signals, tiny blue signals, only develop in a very confirmed trend. Right now the trend is up, but still, again, this is not a fully painted signal yet. So right now, that's a signal within range. This thing continues to be at the center of this larger 7 day range with an upward bias. So we could see this thing flow higher. It could continue to flow back and forth within this range until we're ready to see expansion. So a lot of compression here, a lot of chop around the FOMC key level 38,606, which developed January 31st. At some point here, the expectation would be for a move away from this level. If it's to the upside, it could go up, reject, and come back for a retest. If it's down, it could drop and then back for a retest. Until then, a lot of chop right now with an upward bias. All right, that is it for now. We'll see how this develops here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.